Welcome, everybody. Thank you for being here this morning. Um, you picked a particularly good time to attend because as you heard, we have Jack Broughton with us from Manhattan Life and Omniplex and all the good things that are going on there and how they've sort of taken on the favorable position in the short-term home health care space, as well as the standalone home care space, and their entire Lighthouse portfolio of products has separated itself from the competition. And you're going to hear from Jack just in how many ways they can become the best product you can refer or recommend to your clients. Again, this is FPS and NAS is a Friday call. That is our mission statement. Our job is to help you grow your practice in whatever way you deem needed or necessary, and we're here to help you do that, including when it comes down to opportunities, investing in you to make that happen. Okay, so as I said, our special guest today will be Jack Broughton. I'll be bringing him on in a second. I've gotten a bunch of feedback from ILTCI and all the things that are on the precipice of coming into reality. I can tell you this, that overall the industry is very positive about its future, but we'll go into great details about some of the things we found. They really did some never before done things that any of you that are in the profession of helping people find an LTC solution will benefit from hearing. So stay tuned for that. We'll have some carrier updates and webinars, some news you can use, and then a little bit different today. I wanted to go off on ways that you can help yourself stand out, both in the marketplace, with your fellow producers, with the FMO, and with the carriers. So we'll cover all that. But now I'm going to stop sharing so we can bring on Jack. Jack prefers to be called Jack. It's Jack Broughton, but when he shows me his slides, you see that, Jack? You want to stop sharing? We'll see your slides, right?
Yeah, to be fine. You should.
Yeah, okay. All right, I stopped sharing. So let's see if we see you. Something's going on. Yeah, there you are. Okay, so there's Jack, and take it away.
Well, good morning, everyone. This is Jack Broughton. I'm in the wonderful state of Georgia, outside of Atlanta. I know many of you are spread across our country, wherever you're at. I trust you're having a great morning or planning to have a great day, that's for sure. When we talk about Manhattan Life, one thing, and I've been in this industry for 34 years, in fact. So I have a really good understanding of what you go through on a daily basis. Why is that? I started off just like you. I remember back when I started February 14th, 1990. I remember that I used to knock doors. I used to prospect. I'd work commissions. I had to work nights and blah, 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 the same things you guys go through. There's a different time then. I mean, there wasn't all the danger of being afraid to go out and knock doors at that time. Now it's just a different time, and I do understand that. But another thing I understand is that you can go as high as you want to go. It really just depends on what you are looking for in your life. Manhattan Life is not going to be the answer to all things, but it is the answer to some things. And in no way am I going to say that Manhattan Life's better than Aetna or Cigna or Humana or anybody else. We are an insurance company out there just trying to provide products to the force, like Mark Goldberg's heading up NAIS and all that kind of stuff. And you guys are just a vital part of none of us are any better than anyone else. We all just play different positions. I played professional baseball before I got in this industry for the Pirates, and I went with the Yankees in the early 80s. So I'm a very competitive person still to this very day, because that's the way I was brought up and raised, and that's just how I'm programmed. I don't like to lose, number one, to be honest with you, and I'm sure you feel the same way. But Manhattan Life, when they started back in 1850, I mean, just think about this just for a moment. We're talking about a company that paid out benefits to beneficiaries of the Civil War in 1865. So Manhattan Life has been around for a long time. They have stood the the face of time. They have went through many episodes that a lot of insurance go through, and you will too. It just really depends on what are you really looking for. We can get into some mental approaches here if you like, but what I'd like to do first, and thank you, Mark, for that introduction, is take a look at Manhattan Life's portfolio of products. Think of Manhattan Life as a large insurance company that offers products in the way of annuities, group products, individual products. So they have different divisions throughout the country and outside of the country as well. One of those divisions is called the Lighthouse Series. That is my responsibility. Let's take a look at the products that make up the Lighthouse Series, which is a division of Manhattan Life. You got the Home Health Care Select Plan, Secure Advantage Final Expense, Cancer and/or Heart and Stroke. There's our Med Sup plan called Manhattan Life of America, Dental, Vision, and Hearing Select, Accident Guard, and our most recently released product last year called Omniflex. Now, I don't have enough time to go over all of these products, but I will take a little bit of a bird's eye view of each one of these plans as we begin the broadcast. Let's talk about them right now. Number one, if we talk about cancer and/or heart and stroke, what are some of the key takeaways? Number one, issue ages for this plan is 20 to 85. Benefits up to $75,000. Let me talk about that for just a moment. If you got the CHAS product, which is an acronym for cancer and/or heart and stroke, a person can have $75,000 of lump sum coverage in the event that cancer comes knocking at their door. It's in $5,000 increments up to $75,000, but then also a person can have another plan through CHAS called the Heart and Stroke, $5,000 to $75,000 in $5,000 increments. So if a person builds the total plan through CHAS, they can have up to $150,000 of lump sum coverage. Because, ladies and gentlemen, I'll tell you this. Now, when I do a presentation, I'll come across very professional and be very kind and all that. But then also there's a part of me that inserts reality, which I'm about ready to do right now. These events that I'm going to cover on this slide, and there's 7 of them, is going to knock at your door. It's going to knock at your door in the way of your mother, your father, your brother, your sister, your relative, your friends, members of your church or your civic organization. Folks, we have to understand that adversity is upon us. All of us are going to die one of these days. Here's the magic: we don't know when. And like I said earlier about some adversity knocking on your door, it's going to be cancer. It's going to be heart attack. It's going to be stroke. It's going to be diabetic. It's going to be death itself. And when I talk about these plans, what point I want to make is this. I don't care if it's Manhattan Life. It could be Cigna. It could be Humana. It doesn't matter the insurance company. You provide such a wonderful value to this country in the way of showing your clients plans that's going to it's not going to eliminate the event, but it's going to make it a lot easier to handle when the beneficiary or the receiver of the claim dollars has money. They're going to be hit up with it. This is where you come in. You have to see yourself as one of the most noblest professions in this country, because who's the first one to call when adversity strikes? The insurance person. If you have an accident in your car, who do you call first? You call Geico. You call Allstate, State Farm, or whoever it may be. Because there's plenty of wrecks out there, isn't there? What's the same thing with what we're talking about today? See, it all comes down to mentally seeing yourself of the value that you bring. And Mark just opens the door of opportunity for you. It's not me. It's not Mark. It's really not NAIS. It's not Manhattan Life. All of us are in this together. You just have to believe in yourself and what you're doing as it being noble and not some high pressured salesperson. You're not a salesperson. You are providing the gospel of this life because these events will happen. Forgive me for preaching, but let me go back to this. The client has the ability to choose their own coverage, and there's two riders available on the plan. Number two, home health care. Wow, this is one of the most popular plans that we have in the Manhattan Life portfolio. Why? Because when a person has an illness, a sickness, or an accident, where would you rather recover if that strikes you? Would you rather recover at a hospital or a nursing home or at home? The vast majority of the people would rather recover at home. Why? Because that's where your natural surroundings are. That's where your Barker Lounger is, your pictures, your pets, your family can come in and out. The medical field says this, that people who recover at home recover much faster than being at an assisted living facility or a nursing home or a hospital. And I'm not knocking those other venues. I'm just saying, just think about it yourself. Where would you rather recover if you need physical therapy? We all would rather recover at home. There are three plans to choose from in this plan: Classic, Premier, and Deluxe. There is a prescription drug benefit in this plan that is absolutely phenomenal. In fact, when you learn all the nuts and bolts of the home health care plan, you'll see that this plan is practically free to the client. I'll talk about that more in a few slides from now. Number three, dental, vision, and hearing. Issue age is 18 to 99. The client has the ability to choose their own coverage. Why do they have that ability? Because everybody's different. Everybody on this call is different. There are some people that may be single. There could be some people that's divorced. There could be some people that's married. Some have children. Some don't have children. We're all different, and we all enter different phases of our life. I remember my children when I was raising them at a time, of course, it was me and my wife and three kids. Well, as time went on, each one started leaving the nest. Now they're all out and about and all have children. Look, ladies and gentlemen, that's called life. And it's going to come your direction too, if it hadn't already. Plans guarantee issue. Why is that important? This is the beautiful thing about this dental, vision, and hearing plan. It doesn't matter the client's health situation, height and weight, smoker, non-smoker, family history. It doesn't matter. The plan's guaranteed to issue. It's not only guaranteed to issue, all of our plans are guaranteed renewable. What in the world does that mean, Jack? When a person signs up for any of the plans I'm covering today, they're guaranteed to renew. What does that mean? It gives peace of mind to the client in knowing this, that regardless of their future health, the plan's guaranteed to renew. So if if adversity comes their way, like cancer, heart disease, diabetic, whatever it may be, it's guaranteed to renew, regardless of future health. That gives peace of mind. All of these products I'm covering today, in fact, all of the products at Manhattan Life provides peace of mind. That's what all the products that all the insurance companies in this country offer. Peace of mind. I hope you see that, because it's not that you're selling for Manhattan Life. You are providing peace of mind to the client. And in fact, when you take care of a client on any or all of these products, what are you doing? You're building a relationship with them. They trust you. They buy you. Manhattan Life's been around for 174 years. You don't have to sell Manhattan Life. They've been around. They're $1 billion company. And all the other companies can brag about that as well. That's not what they buy, ladies and gentlemen. They buy you. They buy you and your passion and your confidence and your knowledge in the product arena. See, that's why it's important when we talk about these products, you've got to learn them to know them. Let's go to number 4, Secure Advantage. This is our final expense plan. What is final expense? In the event of the policyholder's death, there is a claim paid out to the beneficiary. There's no better way to say from the grave that you love them than with a check. And I'm not trying to be flippant about it. I mean, think about it. It's hard enough for beneficiaries spouses, children, family members, or whatever it may be, to miss the one that's gone. But then it's another thing to miss the one that's gone and all the debt that's left behind too. That's what final expense is. On the Secure Advantage plan, look at the age range, 0 to 85. A client ages 0 to 49 can get up to 50,000 of permanent coverage. 50 to 80 can get up to 25,000. Ages 81 to 85 can get up to 15,000 of permanent coverage. Jack, why are you emphasizing permanent? Because it's permanent. When the policy's issued, the premium stays the same as long as they live, as long as they are making their premium payments, period. Some people like term, some like permanent. They both have a fit for not Manhattan Life, for any company. It's just everybody's situation's a little different. If you take a husband or wife that have 3 little kids, term coverage would work perfect for them. Why? Because they need to be covered for a term of time. Term insurance is cheaper because you're renting insurance. That's what it comes down to. Permanent insurance, you're buying insurance. Let's go on to the next one. Our Manhattan Life of America MedSup. You know, MedSup standardized. We offer the A, F, G, and N. Number 6, Accident Guard. Issue ages 0 to 75. 7 plans to choose from. Wow, look at the latitude. Like I have been saying throughout this broadcast thus far, and we've already went about 12 minutes, is this, that our plans have a lot of flexibility because everyone's situations are different. Everybody's financial situation is different. And people encounter accidents, don't they? How about you? Have you had an accident recently? I'm not talking about a car accident. How about falling down steps? How about your child at a baseball game getting hit or something, or breaking an arm or finger or whatever it may be? Look, accidents happen. So this plan covers the policyholder in the event of home, work, or play. Lastly, Omniflex. Omniflex is long-term care like. It's not a long-term care plan. It's long-term care like. I just want you to understand on all these products, you have to make sure that the client understands what you're selling and what they are buying, what it is and what it is not. The Omniflex is a short-term care plan. In the event that a person needs to go to a nursing home or a hospital or assisted living facility, hey, there's coverage. Look at the issue ages 45 to 89. Simplified issued, guaranteed renewable. Wow, you've heard me use that word on every plan. All these plans are guaranteed to renew. Lastly, it has an RX or a prescription drug benefit as well. Now, let me summarize this slide. What did you see that was kind of different? Here's what's different in these plans. It's not a 65 and older block of policies. These plans, look at some of them, go down to age 0. I'm looking at the Accident Guard, Secure Advantage, Dental, Vision, and Hearing, Chaz, all for the youngsters too. Let's go on to the next slide and take a closer look at these plans. Home Health Care Select. I got about 8 minutes and I'm going to shoot through these, okay? Let me set the stage. Please pick up the outline of coverage for each plan that you are turned on by, that you see you can really wrap your vocational mind around and not be ashamed to offer a plan or plans that I'm showing you. Because, ladies and gentlemen, like I have said, adversity will come to their door. And the first person they're going to think of when it does is you. Have you ever heard of the word called error and omissions? That's insurance that you have. Look at the words error and omission. I'm going to talk about the word omit. It's your responsibility for the company that you represent to show the product. It doesn't matter whether you're buying it. It's your responsibility to show it. It's up to the client to buy it. If they see it's a fit, whether it be the home health care, the Chaz, dental, vision, hearing, secure, it doesn't make any difference. If they see the wisdom in protecting their family in the event of whatever it may be, you fill in the blank, then they can buy it. But it's up to you to show it. That's why I'm emphasizing, look, you are a representative for Manhattan Life under the auspices of an FMO like Mark Goldberg. Okay? We're trying to give you the tools, teaching you about these products, but it's up to you to get the brochure, the agent guide, the outline of coverage, the app, to understand it, to look at the many movable parts on these plans. Let's take a look at Home Healthcare Select. Number one, I'm going to show you the value of this plan. Two, cost. Is it affordable? Three, is it going to get issued? I'm going to answer number three right now. The issued rate is up near 100%. Period. That's what it is. The cost, anybody can afford this plan. I'm going to prove it here in a minute. And the value, we're going to talk about it right now. Look at this slide. All of this stuff that I show on all of my presentations are really parts of a brochure or agent guide. None of this is my opinion or any of that nature. This is all straight out of the approved brochures, agent guide, outline of coverage for our company. So I'm not trying to add in my opinion. Let's look at some facts. Ages 45 to 89, guaranteed renewable for life, 30-day free look in this plan, meaning that a client has 30 days to examine a policy. It's what they want, fine. If it's not what they want or they thought you were selling, then of course they can send it back to the home office. Any premiums taken out will be refunded. So it gives them that peace of mind to examine. Number four, simplified underwrite. Wow, the underwriting on this plan is phenomenal. I'm going to show you in just a minute. This prescription drug benefit, I'm going to stop right here and ask you a question without you having to answer me. Of the clients you've taken care of, it doesn't matter the product or the company. Whether you've been in this business 6 months, 1 year, 10 years, 5 years, it doesn't make any difference. Of those clients that you have built a relationship with, how many of them have been on prescription drugs? Just think about that just for a minute. I do about 200 of these a year. I travel throughout the country for Manhattan Life. I've been in this 33 years. And that's not bragging. I'm just telling you, there's a lot of history there, right? You know, the vast majority, 95% of the clients, when I ask the agent that question, are on prescription drugs. Why am I saying that? Because they get reimbursed on prescription drugs they have filled every month or whenever they have them filled. It's free money for Manhattan Life. Let's go ahead and look at three things here. Number one, you see three buckets. Let's call those 1, 2, and 3 buckets. Buckets of benefits. Number one, you got the Home Healthcare Select benefits. Each bucket stands on its own. And you're going to see that there are 3 plans, a Classic, Premier, Deluxe. This is what the client can choose from. Everybody's different. And you see those dollar amounts right immediately under Classic, Premier, and Deluxe. Classic's $150, Premier's $300, Deluxe $450. What does that mean? When a person goes on claim, and the person that makes that determination is the physician, not me, not Mark, not Manhattan Life, the physician. The physician makes that determination that they recover at their home. Keep in mind, this is for recovery at home. So underneath Classic, the max that can be paid back to them in the way of a claim is $150 a day. Premier's $300, Deluxe $450. We got right here, let's use Premier as an example. You're going to see, you're going to see that right under Premier, there are over to your left, you're going to see under, you got nursing care, physical therapy. So there's 8 different events where a person can go on claim for. Even if they're on claim for all of those events, which is highly, highly remote, they would still get a max aggregate of $300. I just want you to understand that. Bucket 2, home health care aid, has nothing to do with 1. A home health care aid is where a physician says that an aid, which is under the auspices of an RN, RPN, or a professional of that nature, it's not a family member, it's not a church member, it's not a friend, it's got to be someone that's of the professional nature that falls under what I just hit on. A home health care aid comes in to take care of their ADLs, the activities of daily living, or some cognitive issue. If they come in, you see it right there under Premier, $80 a day. That's what the client, now watch this. This is what the client gets. The client would get $80 a day. So if there's someone to come into their home to help with their ADLs because of an accident or whatever it may be, they get $80 a day. It's not by an hour, it's a day. So if they're there for 10 days, and it doesn't have to be continuous, it could be just 10 days, however it is. That's 10 times 80 is $800. Well, let's go up to that number one bucket. See that home health care selects? What if they max out their premier aggregate of $300 a day and they're on claim for 30 days? That's $9,000. Now, this plan's an indemnity product. It's not a coordination of benefit. What does that mean? It's the client receives cash. This money they can use however they want. They can pay off debt, make their home handicap accessible, put it in the bank, fly in family members, yada, yada, yada. They do whatever they want with these dollars. It's their dollars. Let's look at one other thing, and it's called a prescription drug benefit. Now, this particular benefit right here, this is what I kind of alluded to a while ago. If they're having a generic prescription filled every month, they get $10 per prescription. If it's name brands such as Zocor or Xanax or Synthroid, which is a patented drug, it's $25. So let me just give you an example. Let's say your client is having 2 name brand drugs filled every month. What would they get back? 25 and 25 is $50 a month. So if it's the premier, that's $600 per year they could get back. And it's in a policy year, so it starts over every year, every policy year. So just think about this on this before I leave this slide. Is there value in this plan? Do you know anyone that was in a nursing home or assisted living facility that would rather recover at home? Do you know anyone that was in an accident or a sickness or illness that needed to take advantage of an aid? How about how many people do you know? And this is the real deal right here. That's on prescription drugs. How many MAs have you sold? How many med subs have you sold? How many long-term care plans or final expense plan? It doesn't matter the plan. I don't care who it's with. Every one of those people you've already developed a relationship with, right? So if you built a relationship, they know you, you know them. So if you know they're on prescription drugs, take his plan to them. Here again, error and omission. You got to show it. That's the only way they're going to buy it. Now, if you go into the next slide, where is this plan approved? You see the United States right there. We're in about 35, 36 states right now. As new states are added, we'll just definitely let Mark know and NAIS know. And then that way he can alert everyone else. Now, there are riders on this plan as well. I just didn't want to cover them. Pick up the brochure and you can see the riders that's involved. Before I go to that, let me go back here. Because I know these premiums by heart. If you're in the state of Texas and you elect the premier that I've been covering, and you're between 65 and 69, that's $40.41 a month, right? That's what it is. That's over $500 a year. If you get reimbursed $600 on prescription drugs, is that not free? In fact, we paid you money to have the plan. That's how simple this plan is. Let's go to the next one, talk about Secure Advantage. Final expense, look at the very bottom. The rates are guaranteed. Whatever the premium is at the time of issuance stays the same as long as they continue the premium payments. Death benefit is immediate. Premium rates never go up. It builds cash value. There's no waiting period. Benefits are income tax free to the beneficiary. And there's also an optional accident rider. Where is the Secure Advantage? Primarily in the Southeast, as you can see right there, and it's peppered throughout the Midwest. Cancer and or heart and stroke. I kind of went over that a little bit a while ago. You can see it's in $5,000 increments up to $75,000 for cancer. The same for heart and stroke. If the client wants them both, it's up to $150,000 of lump sum coverage. Look where this plan is. It's a sea of green. It's in most of the United States. You can see where it's not in Washington, Wyoming, New Mexico, and some New England states. Dental, vision, and hearing select. Look at the very top, ages 18 to 99. Policy years, there's 1,000 they can have, 1,500, 3,000, or $5,000 policy. They can also have 2 deductible choices, 0 and 100. Why am I emphasizing that? Here again, the client can build their plan. They can build it as an individual. They can build it as a family. They can build it with children, blah, blah, blah. They can build, so there's so many different ways they could go with this dental plan. It also offers a rider called the Vision Rider, where it provides eyeglasses, contacts, and so on and so forth. And then there's a hearing that they can get as a rider, which is a hearing exam. Are these things needed? I don't know. Every client's a little different. Some just wants the dental. Some wants just the dental and vision. Some wants just the dental and hearing. Some wants the whole kit and caboodle, the dental, vision, and hearing. Here again, their prerogative. There, look at that. It's in a lot of the United States, peppered a few states in the New England, up around the north, and so on and so forth. Okay, let's take a quick look at Omniflex. I hope you don't think I'm going too fast to this, but Mark told me I only had limited time, and I do have another call coming up here shortly. But look at Omniflex. Look at this, what I've circled. Peace. Have you heard me use the term plan now for peace of mind later? Look what I've highlighted in the middle, prepared. Ladies and gentlemen, and I know that there are some people here that on the call that are cooks that may make dinners and suppers and all that kind of stuff. You just don't get the ingredients of a cake or a stew or whatever it may be and just throw it all in a pot and hope it comes out to be a tasty cake. We have to prepare ourselves for this stuff. We have to prepare for the future. I mean, all we have to do is where we're at right now at our age. And you could be 50, you could be 60, you could be 30, you could be new, you could be in this industry for 30 years. It doesn't make any difference. Look at where you are right now. Let me tell you two things that's going to happen to every person that's ever walked on the face of the earth. You're going to get older. That's number one. And number two, you're going to die. I hate to be the bearer of bad tidings, but that's reality. We've got to prepare ourselves for the unexpected. Preparation. That's why I've highlighted that word. So in the base plan, what does it help with? Nursing homes, assisted living, hospice care. There's bed reservation benefits and prescription drug reimbursement on this plan too. Now the max reimbursement on the home health care select is $600. The max on this one's $300. Can a person have both plans? Absolutely. I'm a firm believer in bundling and stacking. You need to prepare your client with these plans. It's up to them to choose whether they need them or not. It's up to them to choose whether they want them or not. But every one of us can look around at what happened to our mother and father. What's happened to our brothers and sisters? Have any of them ever been in a nursing home? Have they ever passed? Have any of them ever had an accident? Let's see. All we have to do is look at reality. Let's go ahead and look at this last thing at the bottom. There are riders that could be purchased. Home health care rider, hospital benefit rider, and also a 5% inflation benefit rider. You're going to see some things over to the right that I've kind of highlighted, but let's take a closer look at them on a next, whoops. Let's look at them right there. Let's stop right here. The availability on the Omniflex is 45 to 89. Simplified issue as well. Guaranteed renewable. Wow, I've talked about that before. Facility care benefit is from $50 to $400 in $10 increments. Elimination periods is 4 to choose from. Benefit periods 4 to choose from. And then look at the built-in benefits. Prescription drug benefit. Look at the optional benefits. They can have a home health care benefit. These are options. $50 to $300, $10 increments. You got elimination periods, benefit periods to choose from. And you're saying, hey, Jack, slow down just a little bit. I'm not really absorbing all this. I don't want you to. I just want you to hear kind of what I'm talking about and get the agent guide, get the outline of coverage. That's where you're going to learn the facts, the figures, and the logic of these plans. Where's Omniflex? Wow, it's in a lot of states as well in the mid 30s. This is where Omniflex is. Now, I'm coming to a quick close, but let me say this. If you don't mind, Mark, give me 2 more minutes. Here's the deal. When you are with your client, and now I'm an advocate for Manhattan Life, I'm a corporate person with them. This is what I do. I live, eat, and drink these products. Why? Because it provides a wonderful life for me and my wife and our children. I live in Atlanta and I take this very serious. I'm not on here to punch or to check a box for Mark Goldberg. I'm on here because I believe in what I do, and I trust that you believe in what you're doing too. But here's one thing I want to close with. It is so important that when you're talking about Manhattan Life and its array of different products available, stack the plans for the client. Oh no, Jack, I don't know if they can afford it. That's not for you to decide. It's up to them to see the wisdom of having a home health care select plan in the event that they've got to recover at home. Two, an Omniflex plan. What happens if they are hit up with an accident and they have to go to a nursing home, assisted living facility, hospital, whatever it may be? What if they die? Are they going to die eventually? All of us are. I've never known a person to come back from the grave to get the insurance. You got to get it before. That's what Secure Advantage comes in. And we also have term products available too. Then you got the dental, vision, and hearing. Do people have tooth decay? Are they having gum diseases? What about cancer and or heart and stroke? Do you know anybody that's ever had cancer? What about heart and stroke? Look, all of these products will fit the person's wheelhouse because it's going to happen. Now, has this been a scary presentation? One that's been fearful or negative? Absolutely not. What I'm talking about is providing bullets in your gun that you could shoot when you're out there in the field, that you're shooting something, and forgive me for my metaphor, but you follow what I'm saying. I've never known a person go to war shooting blanks. You've got to know what you're talking about. Please get the outline of coverage, brochures, agent guides for whatever product that you really see that really gets you excited. And I think you should learn them all because everybody's different. So, Mark, I tell you,
Yeah.
I'm gonna shoot it back to you, and
Okay.
let's see what the audience has to say.
Let's
I
see what they have to
trust.
say. Stop. I think I need you to stop sharing so I can bring your slide up again, but go ahead.
Okay, all right, hold on one second.
Yeah, there were some questions along the way, Jack. One of the things we wanted to emphasize, I know that on all the comparison charts, the OmniFlex product comes out as the best short-term home healthcare plan, not because, like you said, each one of the plans has their unique selling proposition or the unique value proposition that they offer, but some of the things that are built in to the OmniFlex policy make it less expensive simply because of the way you graduate into the full benefits. So
Can you go
people
ahead and
are,
show yours?
yeah, I'm going to see if I can show mine now. Let's see if it comes up here. That's that. And let me see if this slides come up. Is that the slide with you? Are you seeing that?
Uh, yeah. Go ahead.
I
Yeah.
see it.
Yeah. Yeah, good. Very good. Thank you. So, Jack, thank you again for sharing all of that. I know that there's product training on your website. They can get all the different products already
Yeah.
with training with all of them. Again, we wanted to sort of stay away from that today, but you gave them a taste of everything. But they're really interested in hearing more about the things that sort of differentiate you in the marketplace. So if you can, or if anybody has any specific questions they want to ask you about that, now's the time for them to do it.
Yeah.
Anybody? Quiet.
They need to
Okay.
unmute their phone.
Oh, yeah, you have to click on your microphone to unmute their lines. Okay. Thank you for sharing that. They each have the ability to unmute by clicking on the microphone.
Great presentation, Jack.
Oh, thank you. Yes.
Opened my eyes to some of the other things you do, and I think that's great because you can have one presentation where you're really bringing all the threads together
Right. Thank you.
for all their care. Thank you.
Yeah, it's a pleasure.
Thank you, Candy. Again, one of the things with the OmniFlex product is that you get 50% of the benefits when you first enroll, and it graduates up to the full range of benefits by the 5th year. For that reason, they're more liberal in their underwriting and they're more liberal in their pricing. So again, I've said this stat several times, but on the traditional carriers, of the 146 drugs or so that Mutual of Omaha will decline a case for, OmniFlex will accept a prospect or an applicant for. So just so much broader. fact that you can write up to age 89, the fact that of course the policy's paying cash like the other policies, but $400 a day for a facility and $300 a day for home care, with the opportunity to add inflation, separates it from some of the other choices out there. It's just across the board. They've designed a plan that's designed to give your policyholders as many advantages as can be gotten by any one product in the program. A good contrast, you've all seen what Aetna does and some of their strengths, but Aetna, when it comes to home care, offers $1,250 a week for 52 weeks, not $300 a day for 360 days, which is $9,000 a month. So $9,000 a month versus $5,000 a month. And again, it's finding out where these new little niches are that are going to help you stand apart. And when it comes to pricing and underwriting, nobody's going to be more generous than Manhattan Life. So anybody have any other specific questions for Jack?
I have maybe a silly question.
No,
Not
no such
silly.
thing. Go
So
ahead,
say-
Candy.
So say you're at 4.5 years into the graduating level, and you go and claim at 4.5 years, and you are continuing to pay the premium. So when you get to that 5-year trigger, does the daily benefit actually go up, or do you have to wait till you're off claim for it to go up?
Yeah, which plan are you talking about?
Oh, I'm sorry, Omniflex.
Okay, but now go ahead if you can. Okay, I got you now. But go ahead with your question now. If you're at 4.5 years, but
Well,
Yeah,
Yeah,
and you're
I've got
getting
6 months
90%
to
of
go
the
before
benefit
I
instead.
full.
Right. Then the anniversary comes.
Right,
Does she
so-
get the whole amount?
Yes.
yeah, if it's in that 5th year, let's just use that term. If you're on that 5th year and you chose a $400 per day benefit and a person goes on claim, then that policyholder would get what? $400 per day, on the claim. That's exactly what they would get.
So,
Now,
but she's asking if you started on the 4.5 year mark and she's getting 90% of the benefit. When
Right.
she gets to the 5th year, will she get 100% of the benefit?
when she kicks in, yes, it
Well,
will
she
go
doesn't
up.
have to go off claim to come back on claim to
No.
get the full amount. Okay.
No,
There
no.
you go, Candy.
But that's a good question too.
Yeah, it's the first time I've heard it, Candy. I don't think that's a great question. Good question. So the plan continues to move up as you continue to use it, even if you use it before the first 5 years.
Yeah.
Okay, great. Anybody else have any other questions about Omniflex? Again, all this stuff is available to you on their website. It's available to you on our microsites. It's available to you just about anywhere and everywhere you think. Jack's available to you. There you see his contact numbers, his email address, and he won't hesitate to get back to you and back to you quick if you leave him a message. Or
Yes.
send
May
an
I
email.
mention this, Mark?
Yeah,
Mark, let
yes,
me mention
ma'am.
this. Let me mention a real quick point.
Okay.
Here's one thing that differentiates us, among others, from anybody else. And here's what it is that we serve you. You do not serve us. Without you, we do not exist. We would just be brick and mortar. That's all we would be. So none of us are above anybody on being able to help in any way, shape, or form. In training, just on the agent website, on the electronic enrollment, our 2.0 platform, on learning more about the products or anything. That's what I think separates all of us. The president of Manhattan Life, Todd Tippett, we've all been in the field. See, we all understand. Kemp Cole, who is like what I do, he has been in the field. You see, all of us have sold before, but now we have that understanding but we've all been in it for a little bit of time too. But we're here to serve you. That's one takeaway I want everybody to understand is we'll help in any way that we can. I'm sorry,
How
go
about
ahead.
Florida,
What about it?
approvals for Omniflex in Florida?
No, Omniflex is not in Florida. Home Health Care Select is not in Florida. I think they're just more, and it's just an opinion, that they're more long-term care driven. That's what they want in that state, just like California or Washington or some New England states. I mean, that's just how it is. We do have the CHAS product in Florida, the cancer, heart attack, and stroke. The Secure Advantage is in Florida. The dental, vision, and hearing's in Florida. So there are some plans there. And Mark, I think you wanted to kind of talk about that too, didn't you? Add something?
Well, again, what we wanted to talk about, we'd like to know if Florida is at least on the drawing board to be filed, and will you eventually have it? Or
I
you
can't
don't think
answer
it's,
that. I
you don't,
can't. I can't answer that. I don't know. I'm not involved in that side.
all right. And again, it's interesting that parts of the portfolio are there. So
Yeah.
again, that's just something everybody needs to keep tuned into, is to see if indeed the product ever does get approved there, because I do think that these short-term home healthcare products are going to become much more uh, generally accepted by these commissions as they look for multiple ways to help people address this risk and not have to be their Medicaid budgets to do it. So,
True. I agree.
yeah. So anyway, but we'll let you know for sure, and you should look around. Um, Again, there's every one of the carriers has some products in Florida, but none of them have their short-term home health care product in Florida.
Right.
Mark,
Okay. Yes, ma'am. Sharon.
Jack, this is on the OmniFlex again.
Yes.
Can you go into a little bit of details on the triggers for claims?
Oh,
It's
yeah.
my understanding.
Yeah.
Okay, go ahead.
Yeah. That's a great question. And in fact, it's a part of my detailed training is the triggers. Here's the triggers where the physician says the client cannot, I'm just my term, that they cannot perform two or more of the activities of daily living, or they have a cognitive issue such as Alzheimer's or dementia. So there's the triggers.
Same exact as traditional long-term care.
Did that help a little bit?
Is there a
Well,
form for the doctor
I-
or just a written letter?
Yes, a written letter from the doctor saying that the client needs care. Their patient needs care because of one of those two reasons. Sharon, you have
I-
specific.
well, Mark, we had another agent tell us who got into the weeds on this, saying that the triggers are different than your competitors. And that's why I was asking, but I guess not.
That was me.
Alita.
The wording is it's your doctor and it's not ADL driven, at least in the outline of coverage.
That's interesting. Jack, can you look into that so I can get back to everybody about that? Because
That's-
Alita has brought that up before.
It's right there in our agent guide. I mean, look, just get the agent guide. I know it's in there because I cover it, but whatever. I don't know what you want me to find out. What you want me to find out?
The outline of coverage defines it as a letter from the doctor is enough. As opposed
Well, but
to.
I'm sure that the doctor would have in there that they can't perform whatever duties it is. I mean, I tell you what would be helpful is that you get for your team, Mark, a copy of a claim form. What's a claim form look like? You know what I'm saying? And
Okay.
what has to be completed by the physician. And that's where you're going to see. Now, my terms I was using, I'm not saying they're absolute terms. I was just kind of giving you an idea. But I
Yeah.
would think that would be helpful is get a copy of the claim
Is
form.
that available on the website too, or can you send
Yep.
us a copy so we can
No,
look at it on
you
the
can
next
get them.
conference call?
You can get them. Yeah, you can get them.
Okay.
Yeah,
I
absolutely.
call Eric, or I just go on there and try to find the claim form.
Yeah, they're out there. Claim forms. There's different
Right.
ones, like for prescriptions, for the base plan, for the riders. There's just different claim forms, but I mean they are out there because we
The
provide it for the
distinction with the
client.
difference, so I'd really like to get that cleared up because they rely on each other to clarify these things when they run into them in the field, and I will see what we can learn about that and bring that to all their attention, everyone's attention, when we can get that clarified. I'll look into it because it's come up too many times. Sharon and Alita both have asked the question, so I will look into it and get it clarified for you guys. Okay. Jack, thank you for being here. We went
Yep.
a lot longer than I thought, but I've got ways
That's
to
okay.
adjust the rest of the, it's okay. It was important that they hear about it. Again, the more I look at this is the plan I got for myself. This is the plan that I think, is going to give me the best bang for the dollar. That doesn't mean that I'm biased against any of the others. I think they all
Of
have their
course
place, but just saying
not.
that there's a lot to be of good to be had looking at the Manhattan Life product portfolio, the whole
Okay.
Lighthouse portportfolio.
Yeah.
So thanks for being here,
You
Jack.
got it. Thank you so
All right.
much, guys. Everybody have a great afternoon.
You too.
Thank you. You
Bye-bye.
too.
Oops, did I stop sharing? No, I'm still sharing, right? Okay, let's go back to the slides. Okay, stop sharing. And stop sharing and start sharing. There. Dum, 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 dum. Okay. All right. You're seeing the slides again, right? Yes, no?
Got it. I got Jack Broughton's face. Yes.
Yeah, Jack Broughton's face. That's what we're looking for. Thank you very much. Let me resume the slideshow here, and I'm going to shorten the meeting from some of the other stuff so that we'll get to some of it, but I want to get you at least up to speed on some of the other main topics here. So you're ahead of the crowd, if you will. Why is it not? Let me click on the slideshow and from current slide. And it did slideshow from current slide. Resume slideshow. And it's not resuming. There we go. Slideshow from the beginning. There, okay. All right. So there we go. Okay. So let's talk about some of the feedback I've gotten from the takeaways from ILTCI, and that's the slide you're seeing, right, Candy? Okay. I assume that means yes.
Yes.
Thank you. All right. ILTCI had about 900 people in attendance. ILTCI is the International Long-Term, or LTC, used to be the Society of Actuaries, but it's now much more focused just on long-term care solutions. It gets all the home office people and all the actuaries to attend, and the underwriting people and all the other things that are based on how our business operates. It doesn't get as many producers and salespeople as it used to, because they become much more focused on everything that goes on behind the scenes. But still, 900 people showed up. There's no bigger show in all of long-term care. The next one will be in Philadelphia next March, in case you decide you ever want to go. And they do have discounted costs for producers to attend. The whole thing seemed to be focused on just a few subjects: cracking down on fraud, waste, and abuse. They have finding that people are applying for multiple policies, the short-term home healthcare policies in particular, so that they can collect against them simultaneously, which there's nothing that prohibits that, but that because they pay in cash, they get more claims for reasons that are different than what their situation is. And by that I mean they might get somebody to say that they made a workers' comp claim, and then another claim is going because they're showing that they're retired. Now, how can they be both working and retired at the same time, unless that's what they're doing in their retirement? But that's not how they represent it. So again, they're looking for more of those kinds of contradictions. One of the things that certainly came out of the from the prospects themselves was that you staying in front of them is the most important thing you can do. They want to hear from you relatively regularly, in whether it's new things they should know about the tax laws or new things they should know about new products that came out, but constantly sending them something so that they know you're out there and they know where to get you. One of the studies they did showed that 20% of all the sales came a year later than when the person originally responded. So there's absolute value in continuing to stay in front of those prospects until they do buy, because they're going to buy from somebody, or you're going to apply from somebody, and it should be the one that's in front of them all the time, bringing value to them by giving these updates really makes a difference. All right. Something that we've been saying forever, statistics don't work. Get away from saying, 70% of all people are going to need long-term care. None of that motivates anyone to take action. What motivates them are your stories, their personal experiences. The personal experiences are still the single biggest motivator for why people come looking for the solution. We have now entered our 5th decade of offering LTC solutions. It goes back to the 70s, and then actually, 70s. Actually, it was invented in 65, but that was strictly a nursing home policy. There was no standalone or home health care or anything until the late 80s, early 90s, and then that's when the products really started to evolve and became part of people's retirement plans. And if you look at it, it tracks the aging of the baby boomers. That's where the market has been. And again, if you're a baby boomer now, the oldest baby boomer is like 76. And so that entire group of the population that has fueled this the entire time is now moving into those ages where those short-term home healthcare products are going to be more attractive than ever. There's a piece of good news. It was that well, there's plenty of good news, but it is that they finally feel, the carriers finally feel in the traditional space, they have reached stability in how they're pricing the products. That if you look at it, Thrivent hasn't had to have a rate increase since 2003, new policy since 2011, and NGL has never had a rate increase to date. That's because they didn't start in the business until 2016. But they're feeling so confident. People like New York Life and Northwestern were always priced more expensively anyway, and they're now to the point that they can offer their prospects, their policyholders, a non-can policy. Still, you're going to pay 2-3 times more than you would, for example, a MOO policy or an NGL policy. But they're so confident that their pricing is finally at the right place that they can say that they'll offer a non-canceled policy if you want. Getting back to basics is also critical for sales going forward. Again, don't talk about the tax laws or in the different states or the payroll taxes or other things that they're doing, not as a main topic, because nobody knows what's going to happen. And so all you're doing is guessing, and then you can be seen as someone who is, hyping a situation that doesn't come into reality. It's clear that what's going on in Washington isn't working the way they want it, and they're at a point where they're going to. You don't know, and they won't know when to expect anything to happen. But the states are looking at other options on how to transfer this risk away from their Medicaid budgets, and what works with them is getting back to what it was that most of us learned when we first looked at long-term care solutions. Getting a policy is asset protection insurance. It's getting access to quality care. It's having control over what's going to happen if and when you need care. You're supposed to be working with that prospect to put a plan together. And then the policies are how you fund the plan. But again, long-term care insurance is not health insurance. It never has been. It is asset. It's wealth insurance. It's not health, it's wealth insurance. It's about protecting what you saved. Here I talk about the future state tax, same thing, get away from that. They did a focus group. They had a dozen people from around the country as policyholders coming to a focus group via Zoom. Over 300 of the attendees were in attendance in this group, and they talked about what they liked and didn't like, as far as what prompted them to get the coverage and keep the coverage, etc. First thing they said is, Their number one motivator was having had some sort of personal experience. That hasn't changed for the 34 years I've been in the business. It's been a personal experience that drives people to try to solve this problem for them. They want to hear from you, and they want coverage reviews every few years. If you're looking to get back in touch with your prospects, just do that. Send out an email and say, hey, it's been 3 years or 5 years, whatever. It's time for us to take a look at your existing coverage, make sure it's up to date, see if there's ways we can save you money, etc., so forth. New opportunities might have come on the market. They just want to know that there's a connection. They don't like the feeling that they don't hear from their agent after they get the coverage. So stay in front of them, drip on them, do whatever it is you can so they think of you either when they want to get something additional or they want to refer you to someone who they also think should benefit from this. It'll pay all kinds of dividends. Medical records now are only needed in less than 20% of the time. So they've gotten all these other ways to be able to get to the information that where they don't have to involve you. And frankly, they like doing it that way because they feel that they're getting an objective report as opposed to talking to the prospect or going through the medical records, because they can identify a lot of things about your living habits and the like through these other reports, especially through the variations of the medical information board. They're using AI a whole lot more in the underwriting and in the claims, and AI is going to be the dominant way that prevails as how this business is going to be affected. It's here to stay, guys. We're not going to get away from it. And a lot of the conference was focused on how AI is going to play a bigger role in the future. Genworth is coming back into the business. They're coming back in under the name of Care Scout. There's no ETA, as they said, third or fourth quarter this year, but it's still up in the air. Nobody's given out an actual date. That will be great for the industry because Genworth has more policyholders than anyone else. They still paid out $2 billion in claims last year, and their reserves are actually going up thanks to a lot of their rate increases, but they are going up. So again, Genworth is getting back. They're a B-rated company now, but we'll see what happens by the time they come to market. All right, so that was the other couple, three things that came out from ILTCI. I've got some calls out to some others who might give me additional information over the next few weeks, and I'll share that with you on these calls as those weeks go by. Some carrier news, just so you know. Oh, first, this is a link to the websites that Golden Care put together just for us. And I asked, this is where you can access everything you want to know about the OmniFlex product, about all the Manhattan Life portfolios and everything else. It's a link just for North American NAIS. And you have all the different contacts there as well. Everything you need. So it's a specific contact for us. There's the link to a video called Hiding in Plain Sight. And I want you to take a look at that video. I put this link in the email that will follow with the recording. That's what's happening right now with the short-term home health care. It's a solution that's hiding in plain sight. Again, people haven't thought of it this way. They've thought of it as an addition to their Medicare sale, but they've never thought of it as an alternative to, a viable alternative to long-term care. Again, yes, you get 360 days of coverage, but you get that for home care and you get that for facility care. So there you almost have 2 years worth of coverage, and each of them restores. Now, there's nothing wrong with the formula that we alluded to during Jack's talk, and that is people are getting multiple policies. They'll get the short-term home health care policy, and then they'll get the standalone home care policy. And they'll collect against both of them simultaneously, which is perfectly legitimate to do, and store up the money. They're getting paid cash on both. They'll store up the monies that they're getting paid, the benefits they're getting paid, so that when the 360 days, first tranche of 360 days runs out, they'll get they'll have the monies from the other policy to continue to pay for their care. That allows the policy to go into restoration. And again, 180 days later, they'll have another 360 days. So getting multiple policies, especially when it's priced 45 to 50% less than what a traditional long-term care policy is, can lead to all kinds of flexibility on the part of the person needing the care. Collecting the cash through multiple policies is a legitimate thing. There's nothing wrong with it. And it is a solution to worth considering, especially when someone's overly concerned about what's going to happen to them if they run through all the days. And remember, it's days of use, not calendar days. So when they say you have 360 days, if you spread that out, then that's going to last that much longer. So, and you can make multiple claims. One policy paying out or a competitor's policy paying out does not in any way interfere with the other carriers' policies paying out. Okay, a couple other new things that have literally just come to light. I've spoken to many of you, and we've got 6 of you already in the program for testing the program with direct concepts when it comes to getting live leads. If anybody else has any interest in that, as we roll this out and we get the results, I'll be glad to open the door for more of you. I want to see where things stand with that, but we now have, as I said, 6 people enrolled, and we should have results to share with you in the weeks ahead. In the interim time, there's a company called Registered Social Security Analyst. And if you choose to become certified as a registered Social Security analyst, Lead Concepts has a program just for those consultants, and they'll help market you as if you take the RSA course. I put the email on the for this on the as one of the attachments, and you can look into it. And then Lead Concepts has a whole program that they put together to promote your skill sets as a Social Security analyst, to have a broader audience of people that you can help. So if you're interested in that program, you'll see it on there. And this is eligible through Lead Concepts. Miranda is your contact at Lead Concepts. This is eligible for Lead Assist. So if you decide that you're going to pursue this, if you do, you can send in the details to NAIS and put together how exactly you're going to utilize it, and we will consider paying up to 50% of that cost, or investing in you up to 50% of that cost, and you keep 100% of your commissions front and back. In fact, that's what's in blue right there. All right, and this is how it works. So that's the way. But this program is eligible for that. So again, we're going to be there with you shoulder to shoulder, and encourage you to bring in a steady stream of prospects so that you can continue to grow your practice. I don't know anybody else that will let you do that and then keep 100% of your commission levels. So take full advantage of it if you so choose. Okay, there's an email from every week we get a Moo Express and a Moo Focus. They're both on the recording video. The most important thing is they have a section on long-term care every week, and much of this stuff can be utilized as information that you should be sending to your clients. So encourage clients to purchase LTCI now, not later. There's a whole article they have on there, top 10 long-term care considerations. These are the kind of things you should be sending out to your database of potential prospects to, again, stay in front of them, show them that you're delivering value, that you're on top of this. And then this is something about a new application in New York. But every week you should take a look at this, because there's lots of good stuff that you can use for that. Whoops, somehow this didn't get translated, but I'm going to send you the email. Moo, and I don't know why I'm getting into Medicare, but here it is. Moo is sending a letter out to 40,000 of its Medicare clients in about 25, 30 states, just informing them of the changes or improvements that they're making. You'll see the list of the states that was supposed to be here. I don't know what happened to it, that it affects, but open it up when you get the recording and you'll be able to see that. Again, that's the Medicare site of Mutual of Omaha, that's doing it. And we'll be hearing from them on one of these calls here very shortly. GTL has a link that goes right to their library of products. Again, check it out on these CD attachments. And then a couple of other things. Yes, last week I shared with you that we have decided that we can share in the cost of you attending the All Asian Conference in July 15th and 16th. Here, real quick, I'm going to show you a video. And if I can. You seeing that, Candy?
The deadline on cost for tickets in March. Register now. I don't see a video yet, though.
You're not seeing Andy?
No video.
Are you seeing the video with Andy in it? No? Hello? Anybody seeing the video with Andy?
I don't.
Well, that's not, well, we don't want that. I don't know how we got it.
No video.
Okay, no video? Okay, well,
No.
here's the link. I'm not going to play the video. I'm sending you the video. You'll have it in the link. Just click on it. You can see it's Andy at the Star where the event's going to be held, and all the different things that we've got planned. I can tell you it's going to have more sponsors and more people than ever before. And now we're giving you the chance that we'll pay half the cost for you to attend. It's $100 for a regular ticket and $200 for $199 for a VIP ticket. But in addition to that, I've been talking to Jack about doing a contest just for us where you can offset your travel cost or hotel cost and everything to be there. So the 50% off is only good to the end of this month. So today is what, the 21st or 22nd. So you have, there are 8 days to just go to this link and register. And again, if you do, you'll be able to submit the receipt you get for registering back to the company as an expense and be reimbursed 50% of that cost. So for those of you that we're coming as a regular agent but want to come as a VIP, you can do that too. You can use the 50% toward that. So look for the email afterwards. Again, you have to register by March 31st. You'll get 50% of your ticket costs back. The NAIS doesn't make any money off of the admission tickets. They don't even come close to breaking even from it. They just want to make sure you're going to attend. So that's the only reason why they have a fee. And now they're saying to you, we'll show you how important that is to us, that we'll pay for half of it if you attend. So again, consider doing the VIP level. Watch that video. You'll see all the reasons why. But you have to, it's not enough just to register. You have to attend the conference in order to get reimbursed. All right. Paycom is our expense reimbursement portal. We'll show you exactly how to do that once you are registered. And you can also use this discount for any significant other you might want to bring. The discount is open to you through the end of the month, as I said, but then I hope to be able to announce to you by next week's call, if not the week after, a contest that will help offset all your other costs to attend. So I've not met anyone who has attended that was sorry for coming. They all think that they get a lot out of it. Some of you on this call know that for sure. So maybe one of these upcoming calls, I'll have some of you talk to your experience about being there. This is news you can use. This is the 5 best times to buy long-term care. Again, if you're looking to drip on, oops, I don't know why that happened. If you're looking to drip on your clients to give them news as to why they should be considering long-term care, then there you go again. There's the thing. You're seeing the extended care solution slide? Yes? Do I have to share it again?
Yeah, I see it. And you're going to send us this link?
Yes. I'm going to send you this link, and I was trying to open it for you so you could see it, but I'm going to send you this link, and you can use this to stay in touch with your clients. And for whatever reason, I don't know why. Because it's not on slideshow mode, I think. All right.
Hey, Mark, can I ask a question?
Yes, please, go ahead.
You were talking about the RSSA certification.
Yeah.
Do you think it would be profitable for us to take the long-term care certification?
It's a good question. There was a time that it meant a lot more than it maybe does today. I am a big fan of Bill Comfort. He runs most of those classes. He just ran one in San Diego. If you haven't gone through one in a long time, it certainly can't hurt, because the world has certainly changed since those courses have come out. I'm LTC certified. Some of you probably are as well. But it doesn't mean anything as it relates to, like, it doesn't count towards CE credits, or it doesn't count. It's not going to enhance any other aspect of you other than you being able to say that you're LTC certified. I just never seen that matter. It's sort of like statistics. I've never seen it matter that you say you're LTC certified when it comes down to why prospects make a decision to move forward. So it's really up to you. If you want to stay up to speed on it, it's like, chicken soup. It's not going to hurt, but at the same time, it's not going to make you a whole lot of new sales because of it either. But
Okay, thanks.
I'll leave that to you.
Okay.
Okay, so let me skip ahead. We will have a call tomorrow, because I know next week will be Easter, so we won't have a call then. But we will have a call tomorrow again. I'm very happy we're getting more and more of you to come on a Saturday, share best practices and ask questions. Again, I don't like pushing the stuff that we have, but once we're at over an hour, which we are already, I know I start losing a lot of your attention. But again, attendance has been good. You've been coming, and I hope you're finding value in these meetings. Again, the recording appears in case you have a problem clicking on the link when I send out the recording. It also appears on the Facebook page, NAS Facebook page, and on the YouTube channel. And NAS has a YouTube channel. And if you go down every week when you get the email about training available from the different advisors on the team, you'll see a place to see the past recordings of all the webinars. And so they're always available to you on those sites if for some reason you don't get able to access the link. It's rare that that's the case, but I have had it happen a couple of times. And I just wanted to make sure you know that there's a backup to all of this. All right. Anybody have any particular observations from the field that they saw this last week that they want to share? Okay, so we'll come back tomorrow. Depending on what topics you bring, we'll talk about this how to stand out stuff that I wrote. But I'm going to postpone that till then, unless you decide we're going to go off on a different direction, because tomorrow's call is always your call. You get to set the agenda. I will say overall, there's a very positive vibe coming back from the industry. Everybody thinks that the problem is certainly not going to go away. The states are motivated like never before to figure out ways to incent people to do this. Again, I'm not saying that's going to be a payroll tax, but we'll see what they can come up with, because they too have got to transfer this liability to the private sector. And they're going to try to find ways to encourage you to do just that, because the more they do, the private sector takes control of this risk, the less charge there is going to be against their Medicaid budget, which is the most expensive thing in their state budgets. And and unlike the federal government, they must balance their books each year, so they can't print money like the federal government can. So they've got to find a way to transfer this wave of expense that's coming their way. As I shared with you already, that New York spent $440 million in excess of what their budget was for Medicaid last year, and they have to find ways to make that up so that there's going to be things coming down the line. We haven't figured out what it is yet, but everybody's motivated to do it. And everybody sees a very bright future for long-term care solutions. So I'm going to, as I said, skip the last part. Anybody have any other questions? I know that Jack went a little over, but again, I think the information he shares is valuable. Tell me if you've got any questions about anything or comments anybody wants to make. Now's the time. Otherwise, I'll hear you on the call tomorrow morning. We're going to do it tomorrow morning. This is important. I forgot to mention this. As a result of our friends out in the West Coast, we're going to start tomorrow at 9 o'clock Eastern time. So that instead of the 8:30, so that gives you an extra half hour, and hopefully more people can be on. So 9 o'clock Eastern and 8 o'clock Central, and 7 o'clock Mountain, and I guess 6 o'clock Pacific. I know it's a baby step, but it's a step in the right direction. So more of you can attend. So 9 o'clock tomorrow. I'll make sure I put that in the email too. Anybody have anything they want to ask or share before I wish you go out and
Mark?
create a great day. Yes, sir.
Is it going to be on the link that we're on now?
Yes, it'll be on this link. Thank you for asking, Michael. So on this link, again, just click on like you were clicking onto the webinar, and it'll be a conference call for the most part, unless I need to revert back to these slides. But we have the capability of going either way, but always the same link, so we don't make it overcomplicated of having to keep store of all these different links. Same link as today or tomorrow. Anybody else? Well, that's our motto around here. Again, I had a cousin who was in the success and motivation business, and this is how she ended every one of her in-person seminars, was with the words "create a great day." So she passed away, and as a salute to her, I took that sign off to end these calls with. So go out and create a great day, everyone, and I hope to talk to you tomorrow, and make the most out of the rest of the day and the rest of the weekend. Take care, and I hope your brackets. None of you can have your brackets still intact, can you? Anybody tell me that they picked Oakland, which is a Michigan-based school, to beat Kentucky? If you can, you're a better person than prognosticator than I'll ever be.
That probably ruined 90% of the brackets.
Of course it did, and then happens. The chances of having your bracket, everybody having a pure bracket, is something like almost 1 billion to 1. That's why you see these promotions come out. It's almost impossible. Not almost. It's never been done. So again, you see these contests all the time, but nobody plays perfect when it comes to the brackets. But you got to admit, it's exciting. I mean, I was watching that game saying, boy, John Calipari, I don't know how he can. That's 4 times he's lost in the first round, but don't get me started on basketball. But I'll see you tomorrow. I'll hear you tomorrow. Take care, everyone.